U.S. Treasuries took down.
Listen up, Rebels. Rebel Leader here, and today we have another edition of Rebel on the Run. I want to quickly go through with you what happens this past week in earnings season, and also we want to cover RobinHood's IPO, right? So let's start with Vlad Tenov. You know, it was a terrible IPO by all accounts. The first day of trading session, it shot down anywhere from almost 10% within a matter of an hour. And it stayed down there. It opened at $40 a share. It dropped to $30 a share, and then it hovered around, I believe, $32 to $35 for the rest of the day, and the next day over. But then we saw something unprecedented at the end of the week. Randomly, Thursday and Friday, in those trading days, Robinhood somehow shot up a crazy amount of money, 20% one day, and then another 50% the next day. There was a lot of jokes running around that there was a lot of shorts happening on Robinhood, and it's possible that it got a short squeeze. It is also possible that Robinhood just simply, it was a pump and dump scheme, right? And we see a lot of people were hyping it up, buying it right after the crash on the first IPO day, and then now they all kind of dumped it out at the peak. So we'll see what happens. It's a very volatile stock, as it can happen, in any IPO, right? But this is a little suspicious. We'll see what happens. I only got a few shares as to test it out on Robinhood. Anybody could have gotten in on this IPO. So it's interesting, and it's a good test, and it's a good experiment to see if Robinhood is giving out IPO access, right? That's what they're calling it. And, if you want access to an IPO, you don't have to be Warren Buffett. You don't have to invest hundreds of thousands of dollars. You can invest whatever you have to get shares. I believe it's based on a lottery system. And that is why, that was Robinhood's first test. And they're also claiming that this is probably why it shot down, because on the first day of trading, everybody sold. Everybody sold out as soon as it started crashing, because people don't understand that you're not supposed to sell out of an IPO. And so there's lots of reasons why it kind of crashed that first day, but also there is a plethora of reasons that we're still trying to dig into as to why it's been rising so rapidly. Next thing I want to talk about is about the earnings seasons, because what we're seeing is amid all these earnings, I'm talking Win, Revolve, and Ring, RNG. There was a bunch of companies this week that, even though Corsair was another one. Even though they announced a great earnings report, they beat earnings per share estimates. They beat the Wall Street estimates for earnings per share and revenues, and they said guidance. The problem was that they said, they still dropped. The stock still dropped, even despite beating Wall Street estimates. Now, this is because, the reports and the earnings are great. It's a great indicator where the company's at, but we always look at forward guidance, right? The market's always forward looking. But what happened here was that a lot of these companies, they expected a slowdown. Even Facebook, they came out saying at Facebook, Apple, Amazon, that we expect a slowdown of our earnings, of our guidance, of where our business is going to be operating at, because of the potential of the next wave of coronavirus. So they said they expected a slowdown across the board. In all areas of their business. And this was surprising to hear, but also I don't really know if that makes a complete sense, because this was their best year yet, even with the coronavirus, right? And they're still breaking all the records, and every quarter is a record quarter for them, especially for Apple. And even though that they're saying these things, I think they're just trying to really calm the volatility, right, around the business, around their stocks, and around the stock market, because I don't actually really understand why you would ever say your forward guidance that you're expecting a great tremendous slowdown, because they're still putting out crazy numbers. Revolve beat their earnings per share by 100%, beat their estimate they came in over 100%. of their earnings per share, and they still dropped a ridiculous 15%. So then that's also something to note, that this is probably a good time to buy in any of these stocks, because they all went down after earnings. They all went down after earnings, but nothing really changed for their year-long guidance. They're just trying to temper expectations for their third quarter numbers, earnings call, when those will get released. So if point here is if you were in any of these stocks, and you heard these earnings call, none of them were bad, even though the stock dropped. So stick with it. Rebel Leader over out.